Hi, folks. This is your fund manager speaking, and today we have our very positive, bright, youngest CEO in the mutual fund industry, Ms. Radhika Gupta, with us. Radhika, welcome to our fund manager series, speaking series. And we've had so many interactions before, and I'm always impressed at how uplifting your time with me is. It may be less or more, and you've always made time. I have to say that to you. In fact, I have to give your introduction, but I think one episode will go in just introducing yourself. So I'm going to just give three or four things about you, not too many things. Radhika Gupta is the MD and CEO of Edelweiss Asset Management Company. She is in the top voices of LinkedIn. She is in the top 50 women in India, most powerful women in India, named by Fortune. And she has over 55,000 followers on Twitter. Radhika, impressive bio.
Pleasure speaking to you, and I have to say you are also a super happy and positive person, and like you and I were just chatting before, I think the world needs a lot of happiness and positivity. Maybe it's a girl thing, maybe girls just spread happiness.
It could be, and let's spread that it is a girl thing. We'll have more in our tribe.
There should be more of us.
Yes, absolutely. So Radhika, I'm going to start off with a very simple question, and something that sort of surprised me when I met or actually read about you first. Most CEOs of mutual funds come from the sales side. You came from the investment side. How has your journey been? How is difficult or easy? What are the challenges been? How did you overcome them? So many questions. Oh my God. Okay, over to you.
So funnily enough, no one's asked me this question, but it's actually it's a real and legit question because I mean, it should not be surprising because in the business of investment management, investment is very, very core to the business. Not to say that any other function is not core to the business. I have as much respect for sales and marketing as I do for compliance or product or investments. And I think everybody takes some path to be CEO or to be head of business. You start somewhere. I think the important thing, so when I joined the business, I don't come from a mutual fund background, and my bosses then were like, Radhika, we can't imagine you doing retail, because I had grown up abroad, and accent, everything, sort of the whole demeanor sounds very foreign. I'm as Indian as it gets, and they're like, we can't imagine you wearing a sari and going to Jharkhand and talking to IFAs. So I still joke with them whenever I'm like taking a train and going somewhere and wearing a sari, which I usually do. But I have been tremendously adaptable, and it's not to my credit, it's to my parents' credit. I grew up in a foreign service background where they moved every 3 years. So, our background taught us to pick up things really, really fast wherever we were. And I try to be reasonably self-aware. So when I joined the business, I instantly was told that you don't know anything about sales and marketing. I didn't even know anybody in the distribution community. Now, the good thing is that you can learn and people are kind enough to teach you. So I spent the first year and a half meeting a lot of distributors, banks and wealth managers, but I probably met 1,000 IFAs in my first year, one-on-one or through small group meetings. I spent a lot of time on the marketing side of the business. I mean, I still do. I remember a month ago, my marketing team had sent me an SEO review, search engine optimization review for some of our digital properties. And I saw it and I was like, okay. And I told my head of marketing, I was like, listen, I understand SEO, but I don't understand all this terminology. So can you do a one-on-one session where you just explain all this stuff to me? And I have no embarrassment in saying, listen, I don't know this. Someone please teach me. And thankfully, people have been very kind. So colleagues in sales or marketing or other teams have been very, very kind when I have gone out and reached out to help. My first boss, when I had just taken over this role, gave me this advice, and it's super awesome advice. He's like, when you join as a CEO, you have this temptation to add value in every meeting you go to, which means that you're going to go to a marketing meeting and you know nothing about marketing, but tumhe to kuch value add karna hai, so you're going to give advice. And he's like, just don't be that person, okay? Don't try to add value. Just sit there quietly and listen and start asking questions after 3 months and start giving suggestions after 9 months. So I think that really helped me.
Interesting. So this is advice also to aspiring CEOs from whichever function they may come, because nobody is really giving us these tips and these advices unless you're there. There's no mentorship sort of program that is happening for CEOs. So I think this is great advice. Thanks, Radhika. I'm going to get into some of your recent tweets and discuss about that, because that's obviously been on your mind as well. So I'm going to get into the active versus passive debate also, since you are on, I want to say, on the passive side as well, because of the kind of funds you've launched and recent sort of tweets that I see as well. So tell me, is India going to go the passive way? Is that what you feel? Considering we are a cost-conscious nation, or do you think that alpha greed will always be there, or the temptation will always be there?
Okay, so I'm glad you asked me this question. So I answer this question about 2 times a day in different formats. And I think my answers evolved over the years. But first I have to correct a myth, which I don't know why exists about us, which is that we are like a passive fund house. We're not a passive fund house. We run both businesses. And let me come to my belief and then I'll come to the fund house. So my belief is the passive versus active debate is actually a debate that is not worth having in a country like India. Because right now you have to solve the problem of expanding the pie. When your penetration levels at an individual non-corporate are 4, 5, 6%, and the world is at 40% average, I think you have to work on how to go from 4 to 40 rather than how to divide the 4. I think you have to work towards bringing an equity culture, towards bringing a financialization of assets culture, of moving people from bank accounts to any mutual fund product, whether it's an overnight product, passive, active, I don't think it matters. So I actually think the debate is premature. It's a very relevant debate in the US, and this debate took off in the US, which is where I spend a lot of time. Once penetration levels were well past 80%, we're not there. So I don't think the debate is very relevant. Secondly, I think there are good active products, bad active products, good passive products, bad passive products. And I'm not smart enough to opine on the future and say alpha will be here and alpha will not be there. I could venture a guess and say maybe in equities, mid and small cap will definitely be ripe for alpha creation. Maybe large cap will be less ripe, but I'm not smart enough to say that. I could venture to say that in fixed income, people will become a lot more cost conscious as yields come down. But I always think that asset management is about providing solutions to consumers' problems. Whether those solutions are active or passive doesn't matter. I'll take the reason we are labeled as a passive fund house is because of the roaring success of Bharat Bond
Bharat Bond,
ETF.
yes.
I think it's a success because it solved the consumer problem of providing FD-like predictable returns in a liquid, open-ended and tax fund format. If it was called Bharat Bond open-ended fund, roll downs existed before Bharat Bond ETF, to be very honest. Bharat Bond ETF just packaged it well in a passive offering. So I've always believed that, and when we do our product committees, we never think of the product as passive or active. In fact, when we launched our partnership with MSCI, our head of active business, Harshad Patwardhan, who's our equity CIO, was very involved in structuring the product. So we don't think of products as passive or active. We think of them as solving consumer problems. And as I said, I find the passive labeling so funny because we have a very large passive fixed income business, which we're very proud of and which we will grow. But we actually have a very small passive equity basket. We largely run an active basket. Not to say we won't build out a passive equity basket. So I don't know why we get the labeling. We're not sure whether we're passive or active. We're a full service fund house that provides solutions to consumers.
Yeah, and I think even in like each one of our portfolios, I think this place for active, this place for passive too. So there isn't, either or. I think it's both kind of a scene more than either or. Talking about Edelweiss as a fund house, you've had a tremendous 2020. Congratulations on that. You've crossed 50,000 crores.
Yeah.
And yeah. So tell me, what's the strategy that Edelweiss uses in building a team? Is it different? Because that is something that I see a little different when I see Edelweiss as a fund house. That the focus on the team is there. The highlighting of individuals and teams is quite there. And I think even when I speak to people from your team, that comes out very strongly, saying we're so proud of being a part of this team, and we're so valued. So tell me, what's the strategy? What's the secret sauce?
So yeah, no, 2020 has been a good year, and I'm glad you brought up the team question. I'll talk a little bit about 2020, and then I'll spend more time on the team bit. So 2020 incidentally started for us at about 17 or 1,000 crores of asset, and on 2nd Jan 2020, we were actually at National Stock Exchange for the listing of Bharat Bond, which for all of us was a really incredible moment. And then yes, we closed 2020 at more than 50,000 crores of consolidated assets. The equity book has doubled. We did two series of Bharat bonds. The international business has really taken off. BAF became a big fund. So broad-based growth. It is what people perhaps don't know is that 2020 is very special because we went through a very hard 2018 and 2019. We kept growing as a fund house, but our parent was a part of the NBFC crisis. And while we had nothing to do with it, we never held any group paper, etc. We would just constantly get noise about our brand that had nothing to do with us. And I'm so proud of the team because they've stood up and they've defended it. And in the worst of times when people would be sending WhatsApps and nonsense, they would go out and just talk to distributors. So I remember in 2019, we were thinking, should we even do ground events because people will come and say, Aapka brand, ye, all that stuff. And we actually went and did stuff with as much aggression or more aggression than before. So I am, more proud of the fact that we bounced back from the really tough time that we went through in 2019 and came into 2020 the way we have. And everybody knows it's not easy for an emerging AMC. There's just so many challenges that you come up with. I'm happy you highlighted the team aspect. I really believe that in financial services the only asset you have is people, right? I mean, we don't have physical plant or machinery or anything. So and in a young AMC it has to be driven by the passion of the people. And I'm glad people are being highlighted. I mean, I always say that anything that you see in Edelweiss AMC is the work of a passionate group of people. I am just fortunate enough to be the face of that passion, but it is a lot of passionate people. One thing that we do very differently from the industry, since you asked, and again, not many people ask me this question, is we hire younger talent. We give a lot of people chances, and they are first timers in their role. Deepak, who heads sales, is a first time head of sales. He was zonal head at DSP. Varun, who heads Mumbai, was a RM in Delhi. Niranjan, who heads product and marketing, and we've got a lot of love for the work we've done on the marketing side, has never been a marketing guy before. So a lot of the people who are taking on leadership roles are one much younger than industry average and have never done that role before, including me. And I think that we bring a lot of hunger. So most people who are at Edelweiss AMC are not there because of the money. It's not that we pay badly, but they're not there because of the money. They're not there because of the brand. They're there for a single word, and that is legacy. And they're very passionate about कि यहाँ कुछ mark छोड़ के जाएंगे. So I think that is something we have consciously done differently, and that I'm very proud of. I mean, I hope it makes a difference.
I know it is, because every time I speak to somebody at Edelweiss, I know the kind of passion they bring to the table, the hunger they bring to the table. So now I know why that is. It is the secret sauce is legacy, building the legacy. I think, yeah. So that's a very different attitude. That we are in this financial services industry, but not for money. So that's interesting. Okay, so Radhika, I'm going to ask you your a secret now. So, and it's not really a secret because it did come out in Mint. You did share it in Mint last year as well. So, I want to understand pre-COVID and post-COVID, has your sort of asset allocation changed personally? And have you started sort of, because I see people building up more cash or more emergency funds and things like that, or more on health insurance. Have you started looking at your money differently?
Not very much. As I said, I've talked about this a little. My asset allocation journey evolved a lot between 2008 and I would say 2016, 17, where it went from being super aggressive on equity because I was young to the current asset allocation, which just for your viewers is about 70% in BAF. So that is equity plus debt, and it incorporates both. I hold Edelweiss BAF, and the balance is in either mid and small cap funds or international equities. That's broadly my asset allocation. 60-70% is Edel funds, the balance is external, and they create AMCs outside. That hasn't changed materially, and my husband's is very similar. The one thing that we have thought through, which is a learning from, I mean, I always say every crisis has a personal finance how much stock we want to hold as a percentage of our net worth. So we're just thinking about that and calibrating that. But we're very conscious, Sweta, that both of us are financial services professionals. We hold, especially me, a lot of my income is in ESOPs that can be very, very volatile. So we try to make our asset allocation a lot more conservative, which always surprises people. And that has worked for us really well. As I said, we don't hold fixed income because we have a home loan. But no, I think we've been, even in March, when markets were down 30%, I think our portfolio was down 12, 13, maybe 14%. And we were very comfortable. In fact, we didn't even have to look at it much.
Yeah, no, I can understand yeah, totally. And I think as an investor, this is so, sorted, if I could use the word sorted, it's very clear. A lot of us vie for that clarity. In fact, one of your tweets the other day spoke about what an investor should do differently. Not ask about the top 5 funds, but what top 5 things that I could do differently. In fact, this is a question that I get all the time when I do sessions as well. So I'm sure you get this far more than I do. So do you think Indian investor is evolving as well? Because see what happened, I think till last year we were seeing more equity investors turning sort of long term with the SIPs and stuff. But last year, I think record number of trade accounts are opened, and people are trading and they've made money, which is great in the short run, because this gives you that kind of confidence. But I think over a long term, is this sustainable? What do you think of the behavioral aspect?
Indian investors have got a lot more data on their hands. I think a couple of things are happening, and I don't have enough data to talk about this, exit from mutual funds into direct equity, etc. But a couple of things that I see. One is that I think investors are becoming a lot more aspirational. They want growth. I think this is different from a generation ago. Unfortunately, they want growth that is very, very fast, whether it is in their careers or in their investments. And I've always been an advocate, even in our own business. When I look at the flows in our business, I always tell the team sustainable growth, slower growth, sustainable growth. So that has been my mantra. Unfortunately, we want fast growth. Secondly, investors have a lot of data access. I think there was a time when brands and people and all this was there. Now, thanks to the mobile phone, I think you have too much data access. Some of it is also not wise. So that pushes you to take quicker decisions. That is unfortunate because you really need to sit back and digest and hold. And we live in a news-driven world. I still am and I'm told I'm too optimistic, but I still am optimistic about the long-term potential of Indian investors. I just think penetration levels are super low. I think youth is getting more and more aspirational. They're getting more and more aware. And I think that bodes very well for mutual funds. Can we do a better job being long-term investors? Of course we can. Is it harder and harder to do so in a news and information-driven world? Yes, and we'll have to push ourselves far more.
Yeah, I think that is true, because we're so tempted to kind of switch or exit every time we see our portfolio and the kind of news that we see.
Just your portfolio less. I mean, I did this poll on social, Sweta, but I was just checking how often people saw their portfolio, because I see mine quarterly. And I put quarterly and weekly and monthly. And most people said you didn't give me a daily option. Yeah. I just think seeing your portfolio less is
Yeah.
a real recipe for success.
Yeah, I think that is so true. So what other secrets of success are you going to share? So I'm going to ask you a question that I ask all our fund managers. What some good money habits that our viewers can sort of imbibe?
Okay. So first, which is the most boring one, which I'm sure every fund manager on the show has said, but really get your asset allocation right. It works. Yeah, it's like the boring, eat healthy food advice that works. And I think, because you've gone through a bear market and you've gone through a revival, now is the time to rethink asset allocation. See, in a good market, without experiencing a cycle, nobody understands asset allocation because everybody thinks they have risk appetite. It's after March that you really sit back and think, okay, did that really stress me out? Like, if you were feeling very stressed about your personal finance situation in March, then you did something wrong with personal finance, and go back and ask yourself with your advisor that really hard question. So I'm saying get your asset allocation basics right. And this is a good time to do it. March was a bad time to take a decision. This is a good time to take a decision. So I think get that right. And again, I always reiterate, remember, it is very personal. You do not need to copy what the world is doing. So my view on money can be very different from yours, Shweta, which could be very different from my mother's. And it is shaped by the generation we grew up in, what our parents said, what our circumstances are, who we are married to, what our professions are. It's unique. I think as
Yep.
individuals, you have unique financial personalities. So that, I think, is the number one money habit. The second I already talked about, which is just looking at your portfolio less and getting less obsessed with news. Your mutual fund NAV falls once a day, but courtesy this guy, it actually falls about 10 times a day because you get alerts on Twitter and WhatsApp, etc. I mean, today there was a controversy on social media about posting a painting of a national hero, and people wanted to check whether that painting that Rashtrapati Bhavan had released was valid, or was it a painting of an actor. I mean, that is the kind of time we live in. So don't read everything see everything or believe everything you read, and just ask yourself, is this information relevant? There was an example I posted yesterday, and there's a man walking a dog, and he has to go take the dog from the home to the museum. And because the man is walking the dog, he is going to reach the museum, but in the middle, the dog or the kid or whoever is going to do all kinds of things. He's going to cry and scream and go to and he's going to get distracted. So focus on the man, focus on your goals, focus on the underlying quality of what you own, and don't focus on the dog. And we put a lot of energy in focusing on the dog. So I think those are the 2, 3 pieces of advice that I would leave from people. And I think the third is keep your portfolio simple. I mean, you probably know this more than me. Portfolios are excessively complex today. I was doing a show on balanced advantage funds, and someone told me, should I diversify into 6 different balanced advantage funds for diversification? No, my friend, no. I think an average portfolio probably needs 8 to 10 funds at best. And the mutual fund, and now I'm going to be blunt and get into trouble. The mutual fund industry is very good at launching products. We're very good at marketing products. We can convince you to buy anything. That's our job, guys, right? Just because there are 1,000 restaurants in Bombay doesn't mean you need to visit all 1,000 restaurants in Bombay. Just because there are tons of categories of mutual funds doesn't mean you need to buy them. So keep your portfolio simple.
I think some very straightforward, honest advice, which is in the interest of the consumer that you and I serve. So I think that's the kind of Radhika Gupta that we talk to, and that's the personality that we I'm a fangirl of, and I've said this to you before, and I love the way you articulate, and that is something that I envy you for. The other thing I do envy you for is sometimes I feel you won a lottery in time. You've got more time that you can dedicate. I think it's just the way you manage your time. I thought I was managing time well, but you do a fantastic job. So thank you so much for being a part of our show today, Radhika.
Oh, well, my pleasure. Thanks for having me. It's always a pleasure talking to you. Thank you for all the nice words. You always make me feel very good at the end of the day.
All true, all honest words, trust me.
Thank you. Thank you so much.
Thank you so much, Radhika.